that would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar. And Trump has, at least rhetorically, he's been talking strong dollar. So I'm not sure Trump would go along with that. So anyway, who knows? I don't think Doug or Rick Rule or you or me, none of us know if this is going to happen. So I'm not going to invest. I'm not going to make my investment decisions based on a revaluation of gold. If it does happen, I think it's nothing but bullish. There's no way that that is bad for gold.
Gold found solid support around $2,870 in the early Asian trading session on Monday, bolstered by ongoing geopolitical uncertainty and tensions between Russia and Ukraine. These factors are fostering a strong demand for this precious metal. Traders eagerly await the release of the U.S. February WAMSM Manufacturing Purchasing Managers Index later today, which could provide valuable insights into market trends. Renowned market analyst Lobo Tiggre highlights that, despite recent fluctuations, gold has shown incredible resilience against challenges such as rising interest rates, a robust U.S. dollar, and shifting inflation narratives. While central bank buying has undoubtedly contributed to price stability, it does not fully explain gold's ongoing strength. Looking ahead, gold is on an upward trajectory with promising potential for higher prices as we move toward the end of the year. If selling pressure does increase, many savvy investors will likely view any resulting corrections as excellent buying opportunities. The gold market continues to capture significant attention with global geopolitical and economic uncertainties. Trade tariffs, persistent conflicts, and inflationary pressures have bulled the sentiment towards gold. The $3,000 psychological milestone remains a target, even though market volatility may lead to some consolidation or uneven price movements in the near term. Nevertheless, the long-term trend is reassuring, with momentum favoring buyers. According to investing.com, there's speculation that if the official U.S. gold reserve undergoes revaluation, it may occur as part of a stimulus package during the next economic downturn, or as a strategic move leading up to the next presidential election. However, this is not expected to happen in the immediate future. Tiggre notes that while such an event would be positive for gold, relying on it as a core investment strategy is risky when discussing the possibility of gold revaluation. Regardless of potential revaluation, gold is a resilient asset powered by macroeconomic and geopolitical dynamics. The outlook for gold remains bright, and investors have ample reason for optimism. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Two completely different directions I want to go with this, because on the one hand, today, right, gold's down today, was down yesterday, significant, not huge, but a significant turn. At the same time, Bitcoin's gone into reverse in a big way. And this isn't schadenfreude here. I'm not trying to say, oh, well, I feel good because Bitcoin's doing even worse. But I mean, it's an interesting coincidence, let's say. Obviously not. So as a market observer, I'm asking myself, what does this mean? Does this mean anything? There's been volatility in the broader indices. As you and I record, then we're seeing some grain on Wall Street, but it's been a tough week. So my wolf whiskers are twitching here. It's the market, has been volatile since Trump was elected. It's been very volatile this week. We might be at something of a tipping point. It's not a prediction. I said might, but it's interesting. We got, with gold specifically, we got within kissing distance of 3,000, a big round number like that. It could be the sort of thing that ignites a flavor of the day off to the races, some new high because everybody gets all excited. Or it could trigger profit selling, which might be exactly what we're seeing right now. And I can't tell you which it is. Nobody could. We're just going to have to watch this. That aside, that's the near term. Gold has displayed remarkable strength in the face of what would normally be tremendous headwinds. Higher for longer coming from the Fed, higher dollar. Supposedly, the inflation story has been problematic for gold in the last couple of years, though that has changed. So there are a number of things that, should have whacked gold down recently, and they haven't. And I don't think it's just the central bank buying that's enough to explain all that. So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice, looking for those opportunities. And it was interesting that the Bloomberg people, of all people, brought it up. And they asked him twice. Like, they didn't just let him weasel out. They said, well, what about this revaluing the gold in Fort Knox? And he shakes his head and he says, that's not what I had in mind. As you say, other things, right? And but will they? Trump is talking about revaluing, or somebody's talking about revaluing it. And he just repeated, that's not what I had in mind, which is, clearly he doesn't want to contradict the commander-in-chief, right? He doesn't want to get in trouble with his boss. But it's not something he wants to do. It's not what he has in mind. But so he was kind of caught between the what he thinks is right and not wanting to contradict the consensus in the White House. It's interesting. You mentioned my conversation with Doug. Doug thinks that's going to happen. He thinks that this is going to be part of the solution for the powers that be. If they revalue the gold, then that's a huge plus to the balance sheet of the United States government. And Doug thinks they won't even just mark it to market. He thinks they'll take it to $25,000 or $30,000 an ounce. Now suddenly we have a big surplus on the balance sheet, right? Hey, we're in great shape. We just went from triple C to triple A credit rating. I can see the argument for that, but that is a big ask. That is a tall order. And if you already got people like Besant sort of shaking their head and saying, that's not what I have in mind. That would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar.
Gold demand in India showed improvement in the latter half of the week as prices retreated from record highs. However, overall demand remained below typical levels, with traders still offering discounts to attract buyers. In China, gold market activity remained sluggish, leading to continued price discounts. Indian gold dealers offered discounts of $12 to $27 per ounce over official domestic prices, which include a 6% import duty and a 3% sales levy. This marked a decrease from the previous week's discount of $35, indicating tightening supplies. A Mumbai-based dealer from a bullion importing bank noted that February saw minimal gold imports by banks, contributing to the narrowing discount. India's gold imports are expected to plummet by 85% year-over-year this February, reaching their lowest level in 2 decades. Meanwhile, in China, the world's largest gold consumer, gold traded either at par or at a $3 discount over spot prices, reflecting weak demand. Additionally, China's total gold imports via Hong Kong fell 44.8% in January compared to the previous month, reaching their lowest level since April 2022. Notably, recent data suggested a reversal in gold flows, with net imports shifting from China back to Hong Kong. Despite the short-term dip in demand across key Asian markets, analysts remain optimistic about gold's long-term trajectory. Market expert Lobo Tiggre highlights that rising global uncertainty is prompting more investors to allocate a portion of their portfolios to gold. Even a modest increase in investment demand could significantly influence prices, reinforcing the bullish long-term outlook for precious metals. Let's get back to the interview.
So the expectation thing is really interesting. And if you look at these polls, it's been really since the election. Like the ones, I forget, whether it's Conference Board or University of Michigan or one of these guys, they ask the people for their political affiliation. And the inflation it's funny. I mean, it's sad, but it's funny. And it's so human, right? The Republicans' inflation expectations are like zero. Trump is going to, there's no inflation under Trump. And the Democrats think it's going to be 6% or 7%. And you average that out, and it's like 3%. I mean, and it's the opposite. Like, you asked them about growth. Well, the Republicans think there's going to be all this growth, and the Democrats think we're going to have stagflation or stagnation because it's Trump, right? So clearly, there's bias on both sides, right? So these expectations and what's going on, it's funny, but it's noise, right? We can't really rely on these numbers. What we can say, though, is that DOGE has, I have to say, I was wrong, dear audience. I was wrong. I didn't think that DOGE would really make any material change at all. I thought we'd see the Grace Commission on steroids, a lot of noise and thunder. But ultimately, what power would they have? They make recommendations, and in Congress, as always, does nothing. But in fact, Trump gave them power. He gave them through executive branch direct power, at least on the parts of the government where the executive can, apply its authority. They've started. They haven't waited for the committee hearings. Back in the day, they'd still be picking office furniture for what what DOGE is going to do, and making sure they have the wallpaper the right color to match the DOGE logo and all this stuff. We're only a couple of weeks into this, so the fact that they've actually cut anything, and remember, in Washington, a cut is a decrease in the increase in the budget. If you propose a 10% increase in the budget and they slash it to 5%, this is seen as a cut, whereas, it's actually an increase. And so for DOGE to actually cut anything at all, and people are like, oh, it's just a few $billions. It's nothing. It's a drop in a bucket. Well, pardon me. That is more than anybody's ever done before. Like, to me, this is my metaphor for this is, if you have a dog that gets on your computer and writes an essay, you don't whack the dog for making spelling mistakes. It's a freaking dog that wrote something, So this is how I see, sorry, DOGE, dog, It is amazing to me that this has happened. So, boy, this is a long preamble. Where I'm going with this is, I'm trying not to poo-poo DOGE. I am admitting that both Elon and Trump have exceeded my expectations, done more in the real world than I thought they would. But the federal budget is this giant monstrosity. We're not touching the entitlements yet. We're not touching the interest payments alone, right? Over $1 trillion. So I don't think what we're seeing yet. Now, maybe over the course of the year, they can come up with these trillions in savings and it'll make a difference. But right now, it's not really material. The people who are saying it's a drop in the bucket, mathematically, those people are correct. So the inflationary agenda is there. That's real. And the savings that might help that are still hypothetical. So takeaway from this is my outlook is still inflationary. That's very good for monetary metals, gold and silver. It's generally good for commodities writ large, selectively there. But it is good simply on the basis of the inflationary outlook for gold and silver. And then there's also just the chaos factor, the safe haven factor. And that goes back to why I said before, I don't think it's just the central banks buying. I think there's a lot of deep pockets in the US and around the world that are starting to say, you know what, kind of a crazy world out there. It wouldn't hurt to hedge our portfolios with a little bit of gold. And as our mutual friend Rick Rule likes to say, if we revert to mean of the multi-decade average of 2% allocation to gold.
With market trends pointing to a potential breakout in silver and mining stocks, the precious metals sector could see substantial growth in the coming year. As inflation concerns, geopolitical risks, and shifting trade policies drive investors towards safe haven assets, silver's historical tendency to outperform gold in late-stage bull markets may soon come into play. Given the widening gold-to-silver ratio and increasing central bank interest, could 2025 be the year silver finally reclaims its historical highs and asserts its dominance in the metals market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.